それでは早速プログラムに移りたいと思います。まずはじめに、年金積立金管理運用独立行政法人 GPIF 理事長の内田和人様より、GPIF のサスティナビリティ投資についてエンゲージメントを通じた中長期的な企業価値の向上と題し、基調講演をいただきます。内田様、よろしくお願いいたします。
Good afternoon. Good afternoon. Good afternoon, everyone. I'm Kazuto Uchida, President for GPIF Government Pension Investment Fund. I would like to express my sincere gratitude for being invited to the JPX the event today. GPIF has been implementing the various initiatives to encourage asset managers and to engage in the constructive dialogue engagement with invested companies in order to enhance the corporate value of the invested companies and promote sustainable market growth. In this context, I believe that this event will be extremely valuable opportunity to have share the GPIF thoughts on the main theme of the generating engagement synergy with international investors, both Japan and overseas. In my presentation, I would like to explain GPIF's sustainability investment at first, and then focus on the GPIF's stewardship activities. This shows that our investment performance from fiscal 2001, when GPIF began to managing the pension reserve fund in the market, through this second quarter of the 2025. As of the end of the September, cumulative investment income was 180 trillion yen, and assets under management, AUM, were approximately to 282 trillion yen. The rate of the investment return is 4.511%. The asset composition used to be dominated by the domestic bond, with the domestic bond accounting for approximately 70%. However, by reviewing the basic portfolio in 2014, the ratio of the stock to bonds became 50-50. And in 2020, the ratio became to 50-50 between the domestic and overseas, resulting in the current asset composition with an equal mix of the four assets, each 25%. During this same period, Japan FSA established the stewardship code and the corporate governance code, and through the engagement between the investors and the company, corporate profitability increased and the stock entered and sustained upward trend. Against the background, GPIF has continued to perform relatively well, particularly over the past 5 years, thanks to rising the domestic and foreign bond. This is a brief summary of the GPIF's sustainability investment history. GPIF accepted the Japanese stewardship code in 2014, and then since signed the PRI in 2015. At the same time, we established our investment principle. Subsequently, in 2017, we began to ESG index investing and have been actively promoting sustainability investment. Last year, GPIF endorsed and accepted the asset owner principle and formulated our sustainability investment policy. I will touch on the detail of our sustainability investment policy a little later. Let me explain about the background of the GPIF's efforts in sustainability investment. GPIF invests widely and internationally across about 6,000 stocks and 18,000 bonds worldwide. It is universal owner with a portfolio that is a microcosm of the global capital markets. it is also the cross-generation investors that manage funds the little long term to reduce the burden on the future working generation. For this reason, the minimizing the negative impact of the sustainability issue on the capital markets and ensuring the sustainability growth of the capital markets are essential for GPIF to secure the long-term investment return for our insured. We believe that revitalizing the investment chain is extremely important in promoting the sustainability investment. The diagram shows GPIF's position in the investment chain. GPIF is indicated as the red box. The second from the top, we receive the pension reserve from the insured, the actual asset owner at the top. GPIF is not permitted by law to manage stock in-house. So all of the engagement and proxy voting is outsourced the asset manager, the third highest, and the discretionary investment contract. This asset manager creates corporate value through the constructive dialogue and or engagement with the investees companies. Ultimately, we aim to create virtuous cycle that make us to return profits to our insured in the form of the dividends and the investment return. So GPIF formulated its sustainability investment policy at the end of March this year, taking into account its medium-term to objective and asset owner principles. GPIF's sustainability investment aims to reduce to sustainability-related risk and improved market sustainability, as well as just ensure marketable return. And the policy clearly states that achieving both of them will lead to the improved long-term performance of the GPIF entire portfolio. Furthermore, the sustainability investment is defined as any investment that takes into account ESG and so on, and applies to all of our assets, including alternative investment. In addition, we have established 6 initiatives to promote sustainability investment. The first is ESG integration. The second is engagement and proxy voting. Third, ESG index investment and ESG active fund investment. The fourth, impact-conscious investment. Fifth, sustainability risk analysis, and collaboration with related organizations, such as K. Darling, overseas asset owners. As such, regarding engagement and proxy voting, which are the main topic of this event, we have also positioned them as important initiative. Then I'd like to explain more to focus on the GPIF stewardship activities. GPIF has formulated and published the policy to fulfill the stewardship responsibility that set out our response to each principle of the Japanese stewardship code. Based on that, GPIF has established and published the stewardship principle and the proxy voting principle as requirement for our entrusted asset managers. Furthermore, as shown that on the right hand, GPIF's investment principle also may include promotion to other stewardship activities. But this is, I'd like to explain that what the GPIF specifically requires for the asset manager. As stated above, the stewardship principles are composed of 5 main items. I will now dig into the specific activities with engagement, item 3, and the exercise of the voting rights, item 5. But regarding third item, policy for stewardship activity and including engagement, GPIF requires quality engagement that contributes to the long-term investment improvement of the corporate value. It does not simply to require increase the number of engagement. It also requires a coordination between the stewardship activity and investment departments. In addition, in response to each country's corporate governance code, a GPIF requires activity that take into account regional characteristics. As well, I will explain more in detail later, a GPIF also requires passive equity asset manager to take more to effective measure from the perspective of the sustainability improvement for the market. Regarding the fifth point, the exercise of the voting rights, due to the legal restriction, the GPIF does not have a standard for determining whether to vote for or against the individual's proposal, nor does it issue instruction on the exercise of the voting rights for individual proposal. Therefore, we request that our interested asset manager formulate and disclose proxy voting policies and guidelines aimed at to maximize long-term shareholder interest. With regard to the exercise of the proxy rights in particular, we check whether communication with the investees companies has been carried out, including the context, so that the exercise of the voting rights does not amount to merely formality. As a result, we also request the disclosure of the voting result for individual investees company and proposals, which we believed will lead to substantive exercise of voting rights, rather than the merely formality that is often criticized by companies. Next, I'd like to explain how GPIs evaluate our entrusted asset managers' response to these stewardship principles, or in other words, whether we provide incentive for them. The first, we have the comprehensive evaluation as part of our evaluation system for entrusted asset manager. This is a framework that is applied when selected new asset manager and when evaluate existing asset manager annually. In this comprehensive evaluation, stewardship activities are weighted 30% for passive equity fund and 10% for active equity fund. But passive fund manager normally have no incentive to engage in stewardship activities. But as I mentioned at the beginning, approximately 90% of the GPIF's equity management is passive. And given that the long-term growth of the market is essential to improving the return, that we have set a high weighting for stewardship in the comprehensive evaluation for the passive fund investment. But since the stewardship code was established, many interested asset managers have put in place formal aspects such as formulating and publishing the stewardship activity policies and managing the conflict of the interest. So that now we are shifting to a system that evaluates more substantive aspects such as the engagement and the exercise of the voting rights. In addition to the comprehensive evaluation framework, considering the importance of the passive equity fund investment, GPI has adopted engagement enhanced passive approach with more emphasis on the stewardship activities. These passive investment funds, so as I mentioned about engagement enhanced passive fund, have a higher fee level than standard passive one. We selected 2 asset managers in fiscal 2018 and 2 more in fiscal 2021. And currently we have the entrusted 4 asset managers to engagement enhanced passive fund. While each asset manager has its own characteristic, all of them set the engagement goal for each invested company and manage progress through the milestone. We are regularly reported on the individual case study, and we believe that each asset manager conduct highly effective management, preparing to material in advance based on through the analysis, and actively to engage in the dialogue with top management and outside directors. But this is we'd like to introduce the two surveys we conduct with the corporation of our invested company in Japan. GPIF is prohibited by law from directly investing in the stock of the individual company, but so very limited opportunity to contact directly with the invested company. However, recognizing that understanding the actual situation of the engagement is extremely important in evaluating the stewardship activities. We conducted a survey of listed companies every year and published the result of our 10th survey in May of this year. The specific detail of this company survey can be found with this QR code, so we hope you will take a look for details. The survey is based on the question, have you observed any change in institutional investors at IR meeting over the past year? Looking at the bar graph on the left, the dark blue section at the bottom represents the percentage of the respondents who sense a desirable change in all or out of the institutional investors, indicating the gradual trend of the improving. Meanwhile, the bold section at the top of that graph shows that the number of the company who responded or observed not significant change has been increasing over the past 3 years. The pie chart on the right shows that the company that are selected observed no significant change, being further asked about whether benefit dialogue was conducted, with roughly 80% responding that beneficial dialogue was conducted with either most or more institutional investors. If I guess this result, it appears that roughly half of the responding company are assessing that they are having useful dialogue with the institutional investors, but have not seen any particular change compared to years ago, that previous years. This suggests that a higher level of useful dialogue is required in order to maximize the effect of the engagement, which is the theme of today's discussion. The other question of this survey was about TSE's request to action to implement management that is conscious of cost capital and stock prices. Looking at the top graph, you can see that 70% and 80% of the company have complied so status analyst and plan formation and disclosure. And the majority of now the moving on the three, that the implementation of the initiative. This suggests that governance reform led by the TSE have taken hold. Meanwhile, the bottom graph shows that the specific detail regarding three implementation initiative. The most common response was shareholder return, followed by the improved to business management and governance, selling strategic cross-shareholdings. This response indicates that the time span from the decision-making to implementation is relatively short, meaning that so-called short-term capital strategy are going ahead. Going forward, with the revision of the corporate governance code currently being promoted by the Financial Service Agency, we expect to see a shift in focus toward implementing initiatives that contribute to more substantial enhancement of the corporate value, such as the improvement of the profitability of the existing businesses, reviewing the business portfolio and the investment for growth. This is share the result of the interview with the individual company over the 30 companies conducted for the first time and published this April as part of our stewardship activities. The key point from the response, as shown on the right, with positive opinion, such as deepening a dialogue with the mid-term and long-term perspective, and the expansion of the dialogue topic to include the sustainability and the cost of capital. However, as with the questionnaire survey I explained earlier, there are also comments such as investors still frequently ask questions about short-term performance. Some investors are not sufficiently prepared for the dialogue, and voting rights were exercised based on the formalistic standard without taking into account the actual situation. These findings highlight the challenging for more effective and constructive dialogue and engagement. This is a quantitative evaluation of the effect of the engagement. As each stewardship activity is highly individualized and there is a not unified evaluation method to measure their contribution to enhancing corporate value or investment performance, the engagement activity of an asset manager cannot avoid being evaluated qualitatively. GPIF evaluates the engagement activity of asset manager using the evaluation criteria that's as objective as possible. In fiscal 2023, we conducted the quantitative statistical analysis of the engagement submitted by the 21 funds that manage to domestic equities. The table shows the specific number of the KPI was set for each engagement theme, such as Tobin Q and carbon intensity scores 2 for climate change, and PBR and total shareholder return for board structure, self-evaluation and market capitalization for diversity. And we examined whether they had a statistically significant effect on changing the corporate behavior or improving corporate value indicator. The results show that some KPI had a significant effect. So finally, I'd like to explain the key priority of the GPIF's stewardship activities during the current fifth midterm objective period. GPIF published the direction and the midterm initiative of the GPIF stewardship activities at the end of the March of this year, which outlines the 3 key points. The first point is promoting capital allocation and business strategy that lead to the sustainable growth of the corporate value. Until now, corporate initiatives have primarily focused on the improving balance sheet efficiency and strengthening the shareholder return. However, going forward, I believe that the focus will shift to engagement related to future cash flow, such as reviewing the business strategy and the business portfolio. The second focus is promoting sustainability management based on the financial materiality. As sustainability management becomes more widely recognized, companies are increasingly taking steps and disclosing information with awareness of the financial materiality. GPIF has responded to this by conducting the survey of its asset manager, asking them to select a company with excellent sustainability disclosure from materiality perspective. The progress in the sustainability initiative that take materiality into consideration will lead to the increased investment return that better across the capital market through improved economic and social sustainability. The final one is promoting effective corporate governance, which is the foundation of the improving corporate value. GPIF asks its asset manager to deeply understand invested company and the industry trend, encourage problem solving, and offer specific opinion and proposal that contribute to the improvement corporate value. But to promote this, they will pursue the effective corporate governance. In relation to this point, we have also paid close attention to the upcoming revision to the corporate governance code. In the current discussion on the revision, a point of the discussion includes the importance of recognizing the diverse investment opportunity exists, constantly to reviewing whether current resource allocation is appropriate, and clarifying the accountability for verifying whether cash holding are being effectively used for the investment, for example. I believe these are consistent with the GPIF's priority that I explained. That concludes my explanation. For your reference, this documentation has several QR codes, so I hope you will use them to view the specific detail. Finally, my GPIF will to continue to work with you to evolve engagement and promote virtuous cycle in the investment chain. So I would like to appreciate your continued support. Thank you very much for your kind attention. Thank you very much.
内田様ありがとうございました。